Hi friends, you might have heard a lot about green hydrogen and wondered what implications this mega trend may have for long-term investors and which specific stocks could benefit from it. In this video, I shall be sharing some insights on this subject. Green hydrogen is a technology that generates hydrogen through a chemical process known as electrolysis. Hydrogen produced by splitting water into hydrogen and oxygen using renewable energy is known as green hydrogen. As renewable power is the primary input for its production, countries globally are ramping up solar capacities to cater to fast-growing demand for green hydrogen. Environmental concerns about rising carbon emissions from fossil fuels have led to an increase in adoption of green hydrogen. Cost of production of green hydrogen is falling fast and is estimated to overtake grey hydrogen, which is currently being produced from natural gas and methane. Hydrogen demand has increased at a CAGR of 4% to 80 million tons in 2021 from 50 million tons in 2010. It is estimated to rise at a CAGR of 3% to 100 million tons per annum by 2030. Global demand for hydrogen for primary chemical production is forecasted to increase from 44 million metric tons per annum in 2018 to 57 million metric tons per annum by 2030, led by growing demand for ammonia and methanol. While the share of green hydrogen stood at a minuscule of 0.1% in 2021, it is anticipated to grow at a CAGR of 71% by 2030 to 10 million tons per annum, thereby contributing 10% to the overall demand mix. India has pledged to become net carbon neutral by 2070. It has raised the renewable energy target to 500 gigawatts from 450 gigawatts by 2030 to enhance production of green hydrogen. India has set out a PLI scheme, production linked incentive scheme, in two phases of rupees 45 billion and rupees 195 billion to establish a larger manufacturing base for solar photovoltaic modules. Green hydrogen has the potential to decarbonize industries such as refining, chemicals, steel, mobility and natural gas. The Government of India has earmarked an initial outlay of rupees 197 billion for its green hydrogen mission, aiming to produce 5 million metric tons of green hydrogen by 2030, among the largest globally. Two companies can primarily benefit from the increasing adoption of green hydrogen. The first one is none other than Reliance Industries. Reliance Industries has targeted to be net carbon neutral by 2035 and aims to progressively transition to green hydrogen from grey hydrogen. It plans to set up 20 gigawatts of solar energy generation capacity by 2025. It aims at a world-scale 10 gigawatt of solar module capacity by 2024 and 20 gigawatts with 26% efficiency by 2026. It has targeted to double solar module life to 50 years. The fundamental of Reliance Industries remains strong as its other businesses such as Jio and retail are doing very well. A new energy investment plan of $10 billion is further estimated to create long-term value for Reliance. Most brokerage houses have a buy rating on the stock, valuing the company at 25 times as FY24 estimated earnings. On the candlestick charts, there exists a demand zone in the range of rupees 2470 to rupees 2432. The second company is Adani Green Energy Limited, AGEL, which is one of the largest renewable energy companies in India. It has a current project portfolio of 20.4 gigawatt across operational, under construction, awarded and acquired assets. The company aspires to scale up its installed capacity to 25 gigawatt and then 45 gigawatt by 2025 and 2030 respectively, making it the world's largest renewable energy company by capacity. However, in terms of its fundamentals, there are concerns in the market due to high debt levels. The company has turned profitable from FY21 onwards. Being a capital-intensive company, its return on equity is more than 35% plus, but return on capital employed lags in single digit of around 9%. Further, the company is estimated by analysts to remain free cash flow negative until FY26. Hence, only investors with very long-term horizon should keep it on their radar. Based on consensus analyst estimated earnings, the stock trades at 90.7 times its earnings in FY24. On the candlestick charts, there exists a demand zone in the range of Rs 1480 to Rs 1485. Apart from these two companies, some other companies which are getting into green hydrogen space are as follows: GAIL, NTPC, IOCL, Larsen & Toubro, JSW Steel, Jindal Stainless, ONGC and BPCL. And that's it, folks. This is Veera Shah signing off. Happy investing. This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing. Thank you.